It's an introduction or pathway to home ownership. This is the part where I talk about financing and the different options that they have. So for example, option number one would simply be, one is cash. And I just say cash is king. If you have the cash to afford a home, then you purchase it for the cash amount. Number two, conventional financing. I explained to them that conventional financing, you typically need a 700 credit score or greater. You also avoid PMI with conventional financing, and that's mortgage insurance, okay? And we don't have to get too in depth with that. If they want more information, they can get with a lender. Option number three, FHA. FHA, usually people could get approved for FHA anywhere from like 580 is the lowest I've ever seen it before. 580 to 600, 620. Most lenders want to be at right around 620 to make them feel good about doing an FHA loan. But they can get an FHA loan. They usually need anywhere from 580 to 600 credit score in order to qualify for FHA. And this
like
type
580?
580 to 600 on average. They typically need about 45 days to get this loan approved. This type of loan does carry mortgage insurance, PMI. This type of loan also only requires a 3.5% down payment. If you want to go back up to conventional could be anywhere from 3%. I've seen 1% too, but let's not get your customers too excited about this. It could be 3%, 5%, 10%, 20% down. Just depending on how good their credit is, okay? Option number,
But FHA need down payment too? For the
everybody needs down payment, except option number, what? 4. Option number 4 is VA.
The VA is the one that
VA is a veteran loan where only veterans or their spouses can qualify for this type of purchase. It's great if you want to get people interested in a purchase and you know that you're specifically targeting past military veterans. And so some people have created a niche in their business where what they do is they specifically target veterans or military veterans. So they'll put up posts, through Facebook, social media, online. They'll do keyword Google searches. And what they do is they spend all their time and focus targeting veterans. And when those leads come in, they're saying, hey, listen, I know everything about the VA process. I work with the best VA lender in the area. They're also past military veteran, so they already know kind of what it's like. And they have all the options for you. It's 100% financing, which means you could purchase a property with no money out of pocket. And then of course, number 5 is USDA. Now, USDA loans are 100% financing.
Excuse me, not all the banks offer loans for VAs, or there's like specific
No,
banks that
most all of them do.
offer?
Yep.
Okay.
Number 5, USDA. USDA is where you have a buyer that's purchasing a home in a rural area. So that means it's an area or part of town that there's not a lot of infrastructure yet, and they want to bring people out to these rural areas, so they're willing to provide them with financing at 100%. If you want, you can actually look online and pull up the USDA maps for any specific county. Now, option number 6, 203K. A 203K is a rehab loan where the bank will give you money to purchase a property, but they're also going to give you a little bit of extra money to make any improvements that you need to make to the home. So they'll say, here's the money for buying the house, and we feel that after you make the improvements you want, the home will be worth X, so we're going to give you that money to make the improvements. But there is a steps and a process involved with getting a 203K loan, and you have to make sure the lender is familiar with doing one, and you also have to make sure that that you follow the rules with 203K. And typically when a buyer sees a home that they want to purchase but it needs improvements, They have to have a contractor come and give them estimates of repairs, and you have to submit that estimate to the lender. And then when the lender gets that, they're gonna look at the value of the property plus the estimate, and then they'll approve that amount that they give to the buyer. The repairs have to be done within a certain time period, and that money will be held in escrow, and then what happens is the contractor will pull the money out as they build it. Down payment assistance is available through various programs. Check your local county to see if any funds are available and if you qualify. Okay, just something like that. Down payment assistance is something that the counties give to first-time home buyers. Now here's the rule. You have to be a first-time home buyer, which means you've had to have owned a home. You cannot have owned a home in the last 3 years. The county is saying, we want more people to be homeowners, so we're actually gonna give you the money for your down payment as long as you qualify with these minimum qualifications. One is you can't make too much money. And on top of that, it's usually you need at least a 620 credit score. And usually with down payment assistance, you can't purchase a home over like $240,000. So the county will actually give you the money, and then they usually have a rule. They say if you live in the house for more than 5 or 7 years, you keep it, you never have to pay us back. But if you take this down payment assistance money and then you sell it a year later, you owe us some of it back. If you guys need help making this look good and really nice, you can have a mortgage lender, right? You can have them write all this for you with details and information. And on the bottom, you can put that mortgage lender's picture and all their contact information. And then they can help you pay for your packets that you create for your buyers that you give to them. Now,
Do you know what is the website?
no. I mean, I do, but that's what Google's for.